Abhiram Eleswarapu is with us, head of India equity at BNP Paribas India, to take us through what he's making of the markets, whether we got a sort of sharp pullback, correction, whatever you want to call it. Abhiram, good to have you back on the program. Thanks very much. You know, since we were putting out details of this hike from Japan, I don't know. I mean, if you've spoken with your Asia colleagues and any feedback you've gotten, I mean, over the next today is today, but is it significant enough to cause some ripples along the way? The big thing has been the carry trade, right? And yen is extremely cheap currency. Actually, it's gotten cheaper today, but that's only today, as I said. What's your own sense? One point of view, and this is all anecdotal, is that, for example, in India, there's been a lot of Japanese retail flows which have kind of come in. We had a soundbite from Chris Wood of Jefferies, who was saying that over the last 10 years, Japanese locals have not put any money to work in Japan. They've all gone outside. But this would change things. Just your feedback.
Well, I think that part of the move was widely anticipated, and to that extent that's the reason why there was so much focus on the governor's speech today to see if there would be something incremental. And I guess that the market may not have got a whole lot more. I do hear the point about the carry trade, but at the same time, if you see where our market tends to be a lot more focused on, at least from the rest of the year perspective, is the US Fed, because ultimately all assets get priced according to those rates. And what we think will happen starting June is rate cuts, maybe about 3 of them through the end of the year, and maybe another 3 more in the next year. So you'll probably see about 25 bip cuts every alternate meeting. And again, I would say that this is also kind of anticipated to an extent, but when the cuts do come in, I think it will be a positive for the market overall. Between now and then, though, of course, if it becomes more difficult to move money out of Japan, maybe that will have some kind of an impact. But I think the broader focus here would be on the US Fed.
Abhiram, hi, good afternoon, good to see you. And Nigel on this side. What about the Nifty? It appeared that we were set to make fresh all-time highs. We were flirting with around 22,500 odd. We've come down to around 21,800. From here, where do you think we go, say, for the year-end target? And in case we need to go for correction on the headline index, how severe could it be?
Well, our Nifty target is unchanged, and from the last time we met, so it's 23,500. So if you recall, at the start of the year, we maintained that you'd probably have moderate returns this year. This coming off a 20% headline return last year, at least on the large caps, and therefore 23,500 is still what we hold. Now, is there going to be a correction in the near term? I would think not. In fact, we were just back from various investor meetings across Asia, and the feedback is still very positive on India. I mean, it's still a market that many investors are looking at as almost emerging markets type growth in the numerator, and maybe more developed market kind of risk in the denominator. To that extent, investors are willing to pay a higher multiple for India. So if you ask me, I think that the next big catalyst that investors are looking for are the election results. And any signs of policy continuity would ensure that money still comes into India. I think that we may have a little bit of sell the news post the elections and until new announcements are made on the direction of policy. But I think between now and May, we'll broadly be up, not down.
Abhiram, would this enthusiasm that we have for India also apply across the board in terms of indices? Say, for example, the small caps, or is there some amount of caution there and people are probably just staying away a little bit from it?
Well, some of it also is because of the way regulators have kind of stepped in, or at least warned of froth in the indices. And we've seen announcements in the last few weeks or so. Ultimately, it may lead to lower inflows into small and mid-cap funds, and that's also by design. And to that extent, you may see maybe that large and small cap indices perform more or less in line. Maybe large caps actually outperform from here on, and something that we'd been kind of anticipating for the past few months, but maybe it's happening a bit later than what we expected. So I think between now and through this rally, I think it will be large caps that will lead it. And given that the upside to our target is maybe 7 or 8% from here. I think you've got to be a lot more selective from here on.
Abhiram, let's assume for a minute the base case is that there'll be no changes day after the FOMC. So assume that there's no change, but then they further reduce the number of cuts that you should expect this year. So it turns out to be the signal is a bit more hawkish than markets expect. What then, Abhiram? What will be the picture post that? You know, the other worry at the margin is oil, which has crept up to almost $87, $88 a barrel, right?
Yeah, I think both are building somewhat negatively. If what you say happens, then obviously a little more negative than we would think. That's where I think most investors that we've been speaking with kind of looking through the commentary for the time being and looking straight to June. Because realistically, anyone expects any major move only from June onwards. Data has been kind of mixed, as you would have seen, and it's really hard for, the Fed to give one clear direction or the other, and the markets anyway been pricing according to that. Now, oil, on the other hand, I think is a slightly bigger risk. Now, that said, as long as it stays within the range, which is what we're looking at, maybe between 80 and 90, again, that's also kind of known or maybe factored into models. I think it starts to get risky once we get into the 3 handle, that is 100 plus. That's when I think alarm bells will start to ring a little bit. But between now and that price, I think maybe it's sort of known as well. So I think the near-term risks are not that significant in my opinion. And I'm sticking my neck out here a little bit.
What would your approach be towards, say, the banking space, private versus PSU?
Well, actually, we're thinking less about private versus public and more about large versus small. I think if you see the picture at the moment, credit growth is still quite healthy. It's a question of all the FDs in the book getting repriced. And we think that we're probably about a quarter or so away. A large part of that has been done, which is really what investor concerns around the sector were. And therefore, if you see what may happen, let's say 3 to 6 months down the line, the situation could be that that NIMs may have, that it's probably that's the end of the NIM cycle in that sense, and things start to improve from there on. So valuations obviously are still quite attractive, certainly on the private large cap space. And therefore, if you were to pick within the overall financials space, I think I would look at the largest private sector banks, the largest public sector banks, also the largest private insurers, and the largest NBFCs. So I'm going totally large cap here on financials.
All right, Abhiram, final question before we let you go. Then what about the consumption story here in India? One would say that maybe the consumption is slowing down, but actually it may not be the case. Maybe the manner or the type of consumption is changing because of the aspirational value. Everyone wants to consume, higher valued products. How would you play this theme?
Yeah, I think we're very much on the same page on this matter. We think that the affluent India theme that we've spoken about quite a bit in the past is here to stay. In fact, our team put out about 50 odd stocks that benefit from the affluent theme running across sectors, starting from consumer to healthcare to insurance and banking and so on and so forth. So that is really the area we're looking at. What I think we are a little more concerned about is actually the mass consumption, which is actually very much dependent on government support. And if you were to see the latest budget as well, it's pretty clear that the direction the government is taking is a bigger thrust towards capex rather than mass consumption. And so to that extent, I think that that stocks that are plays on that could possibly underperform. So that may include FMCG, maybe even two-wheelers, to an extent tractors. Those are the areas I think would be a little more careful about. But the affluent theme, I think we're still quite positive. I think it's just not a one-year theme. It's going to be a 3, 4, 5-year theme from here on.
Okay, all right. Well, that's on the consumption story. Just wanted your thoughts, say, on the entire pharmaceutical space as well, Abhiram, because, a lot of these stocks have run up and valuations probably have reached a heightened level now, maybe close to their historic averages or even beyond that. But would you see further upside within the pharmaceutical space?
Well, it kind of split the overall healthcare into 3 parts. So first, like you mentioned, pharmaceuticals stocks have done really well. But again, bear in mind, a lot of that have happened through one-off opportunities. And as we start rolling forward into the next year and the year after, maybe investors will realize that that some of the one-offs may not repeat, and that's the reason why they're one-offs. And for that reason, I think that the stocks may start to cool off a little bit. On the other hand, both hospitals and diagnostics fit very well within the affluent theme. And so we still like hospitals and diagnostics. So therefore, I mean, as investors taking maybe a 3 to 5 year view on the space, we'd much rather go in that direction rather than on stocks benefiting from these, these occasional one-off themes.
Okay, all right, Abhiram, always good hearing your thoughts. Thanks so much for stopping by and filling us in with all of those details. Look forward to having a chat with you in the near future. By the way, I just want to...
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.